this is Dan from ForexEarlyWarning.com. Analyzing the Forex market properly can be a really daunting task. At ForexEarlyWarning.com, we created a tool that will simplify this task, and it's for beginners and pros, and it'll give you a total handle on the market and the confidence of a veteran trader. It really combines multiple time frame analysis and individual currency analysis, resulting in knowing whether the 8 individual currencies we follow are strong, weak, or mixed. And knowing this information is better than any other indicator on the market, and it'll point you to higher probability trading plans, and also in managing those trades that you may enter from those plans. The best thing is this tool is free. I'm going to go ahead and show you how to get this tool and to use this tool along with combining it with our Forex Heatmap entry management indicator. So to download the spreadsheet, go to ForexEarlyWarning.com, find the link that says Market Analysis Spreadsheet, click on that. Scroll down to where it says Download the Spreadsheet, click on the Analysis Spreadsheet link, and it will automatically download. This is a Excel file, and you will need to make sure you have Excel in order to use this document. To set up your charts, go to ForexEarlyWarning.com, scroll down to where it says Free Forex Trend Indicators, click on that, and it has step-by-step instructions to set up the 5-12 moving averages. That way you can match up with our trading plans and fill out the sheet properly. Once your charts are set up properly, you should have the green and red 5-12 moving averages, and just set up your bars to be white so they don't interfere with the lines at all, because we're going to be focusing on the far right of this screen here. We're going to look at the trend indicators to see if they're going up, down, or sideways. So the Forex market consists of currency pairs, but the most important thing a trader must know is when analyzing currency pairs, you have to separate those pairs into 2 individual currencies. You have to know based on the Euro-USD whether what the Euro is doing and what the USD is doing. Because if they're doing the same thing, that pair will not go anywhere. If the Euro is strong and the USD is weak though, it will move in a direction, or vice versa. So this sheet helps to do that and accomplish that quite easily. By using the charts and looking at the trends and filling out on the W1, D1, and H4 time frame, we're able to split these pairs into half and fill them into the middle of the sheet here and show us what that individual currency is doing. Strength and weakness in those individual currencies are what drive the currency pairs. So by splitting these 28 pairs in half, we will know what the 8 individual currencies are doing, and you can use the examples on the right of the sheet to show you what is strong and what is weak. And then you're looking for a strong versus weak currency pair to trade. So we're going to show you how to fill this out. So you're simply going to manually enter the W1, D1, and H4 trend direction on each pair. So we'll start with an example of the EURUSD and how to fill it out. We're going to go to the weekly time frame, then the daily time frame, and the H4, and try to find out whether the trend is up, down, or if there's no existing trend. You would simply go to the weekly box here on the EURUSD, click a drop-down box, and choose whether it's up, down, or if it's no trend. Same on the daily, up, down, or no trend. And once you choose that selection, it'll autofill this center section and tell us what is going on in that individual currency. So let's go to the charts. Here we have the EURUSD, and we're going to be looking at the far right of the screen. And what are we looking for? That's the question everybody asks. We are looking to see what the direction of that trend is. So we're looking to see if there's a strong uptrend or a strong downtrend, or if there's no trend at all. So how we look at it is based like on a clock face. If the green and red line at the far right of the charts are pointing up towards 1 or 2 o'clock with angle and separation, that is considered an uptrend. If the green and red line are pointing down to 4 or 5 o'clock, that's considered a downtrend. If the lines are converged pointing at 3 o'clock, that's considered no trend because they're not pointing up or down. And even if the lines are converged, that would be considered no trend as well. And you would simply just go to the sheet, choose your drop down, and pick whether it's an up, down, or no trend. So in this case, on the EURUSD, this is pointing up towards 1 or 2 o'clock, so that would be considered an uptrend on the weekly chart time frame. We're going to go to the daily, and this is pointing sideways, so there's no trend. 4 hour is going sideways as well, so it's no trend. So we'd simply go back to our sheet. We had an uptrend. You can see how it auto-populates in 2 areas. It's splitting this pair in half. It's putting this information in the USD section and the Euro section. D1 had no trend, and the H4 had no trend. And you can see it also populates that on both individual currency sections. So we've gone ahead and filled out the rest of the pairs on the sheet, and we have our results now. So we're looking to see these center sections here, this USD with the H4, D1, and W1 next to it, doesn't match any of the examples on the right, because the 2 examples on the right show you whether it's strong or weak. It should have that same exact orientation. And if you look on the weekly chart, it's almost lined up completely except against the pound. So you have, was it 6 out of 7 are showing you that long term the USD is weak. The D1 is mixed and the H4 is mixed. So longer term the USD is pointing towards weakness. Go to the Swiss section, and the Swiss is not showing you any consistency across the board on that one either. So the Swiss is mixed. The euro as a individual currency is showing you some weakness on the H4, but not completely. Only 4 out of the 7 are showing you weakness. So a little bit of weakness there, but ideally we're looking for a complete setup where the whole group is completely matching the examples on the right. If they're close, it could be because that one that's missing here is doing the same thing as that individual currency. So if on the USD, if the W1 on the pound USD, if the pound is showing no trend, it's probably because the pound is weak as well long term. So let's go to the yen pairs. The yen pairs on the long-term charts are showing you mostly that the yen has been weak. The D1 is mixed, but now the short term is showing you that the JPY is starting to get some strength. So shorter term strength going against a longer term trend. Then you get to the pound group, and there's one of your examples of a completely lined up example. W1 has no consistency across the board, but the D1 is showing you complete pound weakness. So it is one of the weakest individual currencies on the market. Even on the H4, it's weak across the board except against the euro. So the euro must be weak as well. And how do we know that? If we go back up to the euro section on the H4, we saw that it was weak as well. So when you have weak versus weak, it equals no trend because it's not going to go anywhere. You need strength versus weakness, or weakness versus strength, or strength versus a neutral pair. So there we have an example completely lined up. Then we get to the Aussie group. The Aussie has another also as well completely lined up a signal here. The W1 on the Aussie group is showing you it matches the Aussie being strong here, so everything except against the New Zealand. So New Zealand must have some strength as well long term. But you get to the D1 and the Aussie is completely lined up with strength on the D1. So Aussie is strong. Then you go to the 4-hour chart and it's starting to mix up, so that means the momentum's coming out of it, so it's not completely lined up on the 4-hour chart. Go to the CAD group, it's pretty mixed up, doesn't look anything like the examples, and then you get to the New Zealand group, and the New Zealand is showing you strength as well long term, except against the Aussie, so we have long-term Aussie strength and long-term New Zealand strength. Of course, it's not going to go anywhere because strong versus strong equals no trend. Nothing's going to happen with that pair. But the smaller time frames, the D1 and the H4, are showing you that it's not doing anything right now. The momentum has come out of that. So how do you look at these results then? First, you make note of which individual currency pairs are strong and which are weak, and then you match them back into pairs and you see, do I have a strong versus weak? So right away we have a really weak pound group and we have a really strong Aussie group. So the pound Aussie should be a pair that you go look at because should be moving strongly in a direction. And if we go to that chart, let's go to the pound Aussie chart, and you can clearly see it's moved down pretty hard on the weekly time frame. The daily time frame is a really strong downtrend, and the H4 has been moving down quite dramatically as well. So when you have strong versus weak, it equals strong movements. So this thing breaks the pairs into individual currencies, which then point you to strength and weakness, which then point you back to which pairs you should trade. So with that knowledge, and we would want to now write a trading plan based on that information. So we know we have a strong downtrend in place. We're going to look at support and resistance next. Find your entry point on long term, and then find also your longer term target. Make sure there's plenty of room to move past there. So we're going to be looking to set a price alarm somewhere in this area of 1.7514. And the longer term target is about 300 pips away roughly. So that's a great trade plan. Be looking for an entry on that with a target down to that support level. And we're going to use the Forex Heatmap now, which is based on the same information that the spreadsheet does, which is based on strength and weakness, but at real time at entry. The Forex Heatmap measures the market at real time and reads the movements in the market and breaks the market into individual currency pairs and tells us who is strong and who is weak at entry. So if we set a price alarm on that pound USD, we'd be looking for Aussie to be strong and the pound to be weak, moving down in that direction. And the heat map will tell you that. The heat map has all 8 individual currencies here in 2 different market sessions and will show you what direction to go. And if you struggle reading the heat map, go back to your spreadsheet and use the examples on the right. The alignment on the heat map and alignment on the spreadsheet are identical. They work hand in hand. So you should master these orientations that are on example on your spreadsheet in order to read the Forex heat map. So the heat map has individual currencies on there. This is a zoom in part on it that shows you what's going on in that market session. So in this example, in the European American session, it has little arrows that tell you which are the biggest movers in the pair. The Euro USD is completely red across the board. What does that mean? Does that mean strength or weakness? Go back to your sheet, look at the Euro. Completely red means the Euro is weak. Great. From there, you just find a strong currency and then trade that against that. But you can see how at real time, the heat map is moving in a direction that matches up with the analysis spreadsheet orientations and help you quickly decide whether you're going to take that trade. So in this case, here's the pound orientation. If the pound is red across the board and green on the bottom, that means the pound is weak, and that'd be a signal you'd be looking for You'd look to see if the numbers are at 0.25% or higher, and you'd be looking to place a trade. So this would tell you at entry, based on your trading plan, that you could be looking to place a trade on the pound because the pound pairs are weak. So you at analysis, you've filled out the analysis spreadsheet. This tells you what has happened, tells you who is strong and who is weak. In this case, the pound is very weak. You set your trade plan and you find your support or resistance for your target, and then you wait for your price line to be hit. And in the main session, you go to your heat map, and it tells you whether to that trade plan you have written up has a valid entry or not. In the heat map, if it was going the opposite way, if all of a sudden that entry, the pound was opposite of this color, meaning if you go back to your spreadsheet, if the pound was all green and one red, that means it's going opposite of your trade plan and you wouldn't take the trade. So it's a go, no go gauge of a trade, which is fantastic. So one of the other things we do here at Forex Early Warning is we do free webinars, and every Monday webinar we actually go over this sheet, we fill it out, and then we go through it live in the market. So if you want to learn to use the sheet even better, join us every Monday in our webinars. You simply go to the homepage of forexearlywarning.com and click on webinars. And we also have them recorded as well. The previous week's recording is always on there until the new one replaces it. So you don't have to be there live. You can watch the recording shortly after the webinar or join us live. That way you can ask questions on how the sheet works. We look forward to seeing you in the Monday night webinars. Thank you.